Hello, my name is Virgil Dismeyer. I will be your SCORE host today. The topic is one each starting entrepreneur should consider. All too often, the automatic instinct is to get an idea and start from scratch to build that idea into a business. Our speaker today will show you there are at least 3 common alternatives to starting a business. He will concentrate on buying a business. This is not the normal topic of a SCORE counseling session, so we are fortunate to have a nationally renowned company share their experience with you. His name is Dan Bauer with Murphy Business. I will let him introduce himself. Dan?
Hi, I'm Dan Bauer. You can see a little of my background here. I want to tell you about how I got into this business because I think it might be useful to all of you that are looking at options beyond the corporate world. I have been a business broker for 15 years and have owned various businesses along the way. It's a professional habit. I've been in the car wash, distribution, and contracting businesses over the years. I am currently a franchisee with Murphy Business of Minnesota, along with being the regional developer. Here's what we are going to review today. If I'm successful, you will leave with good answers to many questions. Having been in a career transition, I know you are trying to figure out how best to spend your time and what your next direction will be. If you're considering buying a business, you may be wondering if it makes sense financially and from a time perspective. And let's not kid ourselves. Financially is a really important consideration, right? Set your goals before you start visiting your team. Your team needs to know what you are looking for to bring you closer to that goal. You will have options to purchase an existing business or a franchise. There are several different business concepts and types of businesses. I will touch on valuation, but to completely understand business valuation or business appraisal, it would require another webinar. Consult your broker and accountant when putting a value on a business. You will select a business broker, business accountant, advisor, and business attorney for your team. Your team will help you successfully navigate the many steps to ownership and understand new information. We will walk through a typical business purchase. This will help you appreciate the steps involved in your need for professional assistance. And you'll gain information on how to succeed. Surround yourself with good advisors and ask for referrals if you don't know a good professional to help up for success rather than failure right from the get-go. Do I want to pursue business ownership? This is an important question which sometimes won't get answered until you dig in. Take a look at some businesses. Talk to a business accountant and to people that own a business. SCORE offers several online tools and webinars to help you decide if becoming an entrepreneur is right for you. Visit score-mn.org or your chapter website for details. Let me ask you a question. How many times have you thought, sure, I'd like to start my own business, but I think it's too risky? That's what these guys sitting on this girder are saying. To me, getting on that girder looks risky. To them, starting a business looks risky. It's all a matter of perspective. Typically, we don't know how to evaluate what we've never been trained to do. More corporate executives were trained to be managers, not entrepreneurs. So it looks still about perceptions and misperceptions. Look at the facts. How intimidating does employment in the corporate world look? The average employment tenure is less than 5 years. The average middle to senior level exec will only be able to stay in a job for approximately 2.3 years. 7 out of 10 employed people dream of working for themselves. Over 80% will spend time looking at entrepreneurial options during a career transition. The American dream of business ownership is one that is resurfacing more in today's economy. A group in Houston called Gray-Haired Management is a group for senior execs in a career transition. Unfortunately, age discrimination is alive and well, despite what our laws say. People over the age of 50 will find the challenge of finding employment more difficult. And most people have not saved enough money to retire early. Set of surveyed employees use the word hate to describe their job. And only 39% would choose the same career path again. While corporate employment is what most of us were trained for and are accustomed to, it is really the safest alternative. We're all governed by our perceptions, which come from what we have experienced in the past. And most of us have been trained towards work in corporations. Ask yourself, is this what I think or what I know? Remember that phrase because it is going to come up a lot. What I know, is it a perception or a misperception? Let's talk about your goals really are. What is the vision? These are comments that I hear most often. People who are getting laid off every few years are frequently tired of this cycle. Workers are looking for more time for family and other interests. Baby boomers and other generations have worked so hard for so long and are now saying, I've given my all to a company and I'd like to have some time for my family and other interests. Many want independence and control. I hear a lot of clients say, I've made work for a lot of money over the years. I'd like to make it for myself instead. I'd like to call the shots, and I'd like to create a good work environment. No more corporate politics. Others are seeking challenge, recognition, and prestige. The desire for these things seems fairly universal. Just as important is the ability to build something for retirement. Finances are always an important consideration. Having the ability to maintain the lifestyle they have currently achieved and grow beyond that. Getting rid of the ceilings imposed in the corporate world is something I hear over and over. And having the ability to prepare for retirement with the lifestyle and security they want. Or in some cases, even having the choice to be able to retire in 5, 10, or 15 years, which is the timetable many of the people we work with are facing. Perhaps the number one thing I hear is having some balance of lifestyle. Now that's a little funny, isn't it? To think that maybe balance of lifestyle could actually come from business ownership? Entrepreneurs often work a lot of hours, but balance and flexibility are incredibly important and very possible within the world of franchising or business ownership. The goals are to have more control, balance, and money to maintain a lifestyle now, and enough money to be secure in retirement. These concepts tie in together. A lot of clients that I've worked with spend more time in hotel beds than they do their own. One gentleman said he hadn't been to even 10% of his son's Little League games or his daughter's dance recitals. I worked with commented that she didn't like the lifestyle she had. A balanced lifestyle is a major motivator for people to go against their own grain and step into the unfamiliar rather than continue with the known status quo. Allow me to ask you a question. If you knew you could work for someone else, most would work for themselves. And the way I just asked it is kind of tricky, because if I ask if you knew you could be successful, but we really don't, do we? So the big reason is there is no guarantee. Success is not guaranteed in your job or a business. If someone does guarantee your success, I'd run the other direction. You're not just going to be investing your time, you're investing your money. You've worked very hard and built personal wealth. The last thing you want to do is to expose yourself to risk. It takes talent and skills to be successful as a business owner. You are likely already prepared with customer service, sales, management, operations, or project management skills. It is really a matter of finding the opportunity that is going to leverage the strongest skills you have. We'll be talking more about that later. This sounds true and logical, right? If we're honest, what we're really worried about is failure. No one wants to fail. And I'm not suggesting you shouldn't be concerned about this. Everyone who considers going into business is going to feel fear. For some, it's a bit of a culture shock. It's a change in environment, in culture, and in the way you make money. How that fear is managed is what separates those who go into business from those who don't. People who business are fearful, particularly at the outset. But they do not allow fear to control their decision-making. They ask themselves, is this what I think or what I know? Those who do go into business keep moving towards a greater level of comfort, one step at a time. How do you eat an elephant? One bite at a time. It does seem frightening to go into business. If you weren't a bit scared, I'd be a little worried about your sanity. Here's a great quote from Napoleon Hill, who wrote his book, Think and Grow Rich, based on the life and principles of Andrew Carnegie. To deal with the fear, you have to take action. And action is simply taking the next step. When that feels comfortable, take the next step and another step. For right now, you're only learning a little bit about the potential for becoming your own boss. Is it a perception or a misperception? Let's talk about some of the other misperceptions about business or franchise ownership. A new entrepreneur has 3 basic options available to them. Most will think only of starting from scratch. However, you have 2 other options that could meet your goals just as well or even better. Buy a franchise. We won't discuss this alternative in this webinar, but that is a route many choose to take. There are franchise brokers and many franchise businesses that you probably use every day. Like buying an existing business, there are specific steps and research that you should take. Take a look at the SCORE.org online workshops for franchising. Another option is to buy an existing business. Businesses change hands every day. We are examining this option in detail in this webinar. Let's look at some numbers. Statistics show 90% of entrepreneurial businesses fail. They're out of business in 5 years. Most of these failures are due to insufficient capital, no business plan, and no advisors to provide guidance. On the other hand, when pursuing an existing business or starting a franchise, those numbers switch to success. You still need a business plan, advisors, and capital. But you get to see previous owners' success. When buying existing business, financial institutions are more available to help you succeed. Finding the right existing business is essential. I tell my customers that you need to feel that you can do a better job at operating the business than the current owner. That's a great clue to know that you have vision. If you don't feel like you can do a better job when you come out of the visit, reconsider. You may need to ask questions about the business or look at a different business. How will you go about changing the business? Through sales, clients, appearance, or other factors? Take your time making changes. You don't want to change too fast and lose what is there. Get to know your surroundings, assess it, and then you make the changes. Due diligence is about examining the company you want to purchase. When you find the right business, make sure you have a good team in place to support you. A business accountant is a key to your financial start. The accountant you choose needs to give you the right information so you can make a sound decision. If you don't feel you're getting correct information, find a new business accountant. After you go through the financial information and you are satisfied, it is time to move toward finishing the legal aspects. Find an attorney that will give you correct guidance through the process. Spend the extra money up front to start off on the right foot. Never be afraid to ask questions. They have already heard 99% of the questions. There are many advantages to purchasing an existing business. The top reason is instant cash flow to the owner. This is similar to getting a job or a paycheck your first week. With a business, you can adjust your paycheck up. I can't stress how important this is when making the change to your current lifestyle of working for someone else. This is why purchasing a business is more favorable than any other way of getting into business. You can see the results the seller has had throughout the history of the business. All your employees are already in place. This gives you a chance to assess them and see if they will work in your business plan. The existing customer base gives you time to build a larger customer base. For all practical purposes, you are set up and ready to take over. Financing an existing business is more favorable than a startup for both you and your banker. Patience is required when buying a business. You are not buying a car, you are buying a lifestyle and financial security. It takes time and sacrifice. If you can't fulfill those two requirements, you are finished with this webinar. You will need to call your broker every couple of weeks to see if anything new comes in. Don't wait for the business broker to call you. Take some initiative. This is your future. It may be difficult to find cash flow with some businesses you review. If you are familiar with the industry, you may know where to find the cash flow. If you are not familiar, you should talk to others in the industry. When financial records cannot be obtained, usually you are looking at an asset sale, which we will discuss later. If the seller is unwilling to train, find out why. Is it just impossible? If so, then you need to find someone to take the place of the owner and that would be a good negotiating point on the sale price of the business. If the seller is just unwilling, dig into that. Most sellers are willing to train because they want to see their business continue. Discuss cash flow with your accountant. Brokers should not give accounting and legal advice. Check with your team. Your team is your team. They are there to help you. Your business broker is typically hired by the seller to find a buyer to purchase their business. There are times a buyer will hire a business broker to search for a business in a specific industry. The broker is there to negotiate the deal between the seller and the buyer. The role is similar to a home real estate broker, but much more technical and time-consuming. A business accountant reviews financial documents, sets allocations, assists in the price valuation, gives tax advice, and helps you understand the financial side of the business. Your attorney gives you legal advice, sets up your corporate entity, and draws up agreements when needed. You may want to consider using free legal course advice if it is available in your area. Your team to help you be successful closing on your business. A score mentor can be used as a free resource and a sounding board for ideas and help with the business plans. This is an important area. There are a couple of ways to sell a business: asset sale and stock sale. When you buy the company, you are buying the capital stock. With that comes all the assets, liabilities, customers, intellectual properties, etc. You may also be buying unstated contingent liabilities and other stock investors. Most private-owned businesses under $5 million selling price will be an asset sale. You will not be buying the seller's corporation, only the assets of the corporation. Assets include name, phone number, clients, equipment, and inventory. You and your attorney will set up your corporation, which will buy the assets of the seller's corporation. If you are confused, see your attorney for legal advice. Here's another way the term asset sale is used. A manufacturing company has closed its doors. They will sell the assets of the company, such as the inventory, furniture, and equipment. There is no business going with the assets. They have already lost their clients, which is a good indication of why they closed the doors. My point is, know what a person means when they say business asset sale. When buying a business, you need to know the value of the business. Some business brokers do valuations and appraisals of businesses. There are different approaches to valuing a business. You need to have help understanding your financials so you can get to the number that is most important to you. Look for the leftover money to pay yourself after the debt service. This is the most direct approach in valuing a business. There are publications for people to review to gain a better understanding of valuations and appraisals. Seller's discretionary earnings, SDE, price and revenue, EBIT, EBITDA are the market methods of finding the value of a business. Not everyone uses the same approach. Your accountant will advise you on the best approach for you. This valuation is done with selected multipliers and is weighted. Again, you need to talk with your accountant. I just want to make you aware of the different forms of valuation. The asset approach is usually determined by what a buyer will pay for the furniture and the equipment. Buyers need to realize the complexity of this process so they understand why they need help. You will be able to continue with your life while you are trying to find the right business to buy. The complexity should be self-explanatory. Once you have registered with a broker and completed a non-disclosure and a confidentiality agreement to guarantee the seller's confidentiality, the broker can go to work. Evaluate your goals. Provide industry-specific market research. Conduct target searches. Identify and formulate your specific acquisition criteria. Identify, contact, and evaluate appropriate acquisition candidates. Negotiate the successful purchase or merger. Assist in obtaining financing. Assist in finding the right financial institution, law firms, and CPA firms. Keep you informed in real time about new investment opportunities. The buyer has to ask themselves and their family some difficult questions that require honest and direct answers. They should walk through these steps so they understand that they are necessary, not arbitrary. The buyer must understand the broker is not being intrusive. They are trying to ensure that they will recommend the right business for you as a buyer. This is a buyer's self-assessment. You must be honest with yourself. These are the steps we usually follow in representing the buyer in buying a business. We will discuss each step. When calling on a business broker, either through email or phone call, understand the most important information about the business, such as financials, name, and location of the business, is confidential. You will be asked to sign a non-disclosure agreement with a personal financial statement or a buyer questionnaire. The NDA is there to protect the seller and you as the buyer. This agreement ensures that others will not know about the sale of the business. The seller needs to protect his business, including employees, vendors, and customers, to ensure they do not hear of the sale. There is no need for rumors to get started. The buyer's questionnaire is there to help the broker understand you as a buyer, your background, and your interest in the business. The business broker needs to know you are qualified to purchase the business that you are requesting information on. The broker doesn't want to waste your time if they can streamline your search and show you a different business that is more suitable. As a broker, I don't need to know all your financial information. I need to know that you have the funds and qualifications to get a loan for the business you are considering. As you get further into the process, you will want to seek legal counsel along with an accountant. The business broker can provide you with some referrals. Buying a business can be a long process, but it should be enjoyable, exciting, and a good learning experience. This is your dream coming true, so don't let someone make it a nightmare. You are not buying 3M, so don't make it difficult, but protect yourself by getting good representation. If you are working full-time, it is hard to find the time to search for a business. Using a business broker streamlines the process, which is why completing a buyer's questionnaire is important. After you have completed the non-disclosure questionnaire and returned it to the broker, it is time to move forward. At this time, the broker will let the seller know you are looking at the business. The broker will share with you the name, location, and financial information on the business, either through a meeting or email. It is best to meet with the broker at this time to discuss the business, because much about the business is hard to discuss through emails. Take the time you need to understand the business you are reviewing with the broker. If you need to revisit with the broker prior to meeting with the seller, do so. This could be your new business and your future, so spend time with the broker and ask your questions. If you ever get resistance from the broker, seek additional help with the process. Find an accountant, advisor, and attorney to be with you. You may meet multiple times with the broker if you are unsure of the business you want to buy. Remember, if the broker has the business list for sale, he represents the seller, not you as a buyer. That means you need to know the correct questions to ask. Get the information you need to make a financially sound decision. Sign the NDA and have completed the questionnaire. You can request information for your business accountant to review, such as tax returns, profit and loss statements, balance sheets, equipment lists, and maybe a lease or a property tax statement if property is involved. After you review this information with your accountant, attorney, or advisor, you will have more questions. These questions may be directed to the broker, or you may want to meet with the seller at this time. The broker will get the meeting set up for you and your representative, if you choose to have one there, the seller and the broker. You are there to ask questions about the business, like how the business operates, the owner's duties, the duties of the employees, how long has the seller had his accountant, and so on. You and your advisors should have a list of questions ready for this meeting. The one item that does not get discussed at the meeting is the sale price of the business or terms of the sale price. That discussion needs to take place with you, your advisor, and the broker. The reason we don't discuss the sale price of the business is because you already know what the seller is asking for the business from the information you have been given. If you and your advisor choose to offer a different price, that needs to be done in a purchase agreement. The purchase agreement versus the letter of intent. Both will work, but have different meanings. In most cases, you will find a purchase agreement being used by a business broker. This document will state your purchase price, contingencies, earnest money amount, and signatures from the buyer and the seller, holding this as a legal and binding document. Seek advice from your attorney prior to signing. Be sure this document does not state non-refundable earnest money. The idea of the purchase agreement is to set the facts on the document that you both agreed upon. And if any of those contingencies are unable to be fulfilled, you both get to renegotiate the deal. A letter of intent is usually used by an attorney to get the deal structure in place and give the buyer time for due diligence. This document usually states that this is not a legal and binding contract. The purchase agreement is legal and binding and will take the business off the market in order to give you time to complete your due diligence. The letter of intent is not legal and binding and will not take the business off the market while you are completing your due diligence. Buyers with their accountant will review and assess the business financials. This is usually the process that takes the longest. The buyer will verify cost, rent, buyer's discretionary income, and ultimately, cash flow. The buyer can get a historical performance of the business. When reviewing the lease, the buyer wants to make sure that there isn't a significant increase in rent over the term of the lease. Verify rate hikes and make sure you have appropriate outs on the lease. It is a good idea to shop the business so you understand the customer's perspective. Also, evaluate the product and industry as part of your due diligence. Finally, you arrive to the point where the buyer and seller are ready to sit down and draft a purchase agreement. The purchase agreement will entail purchase price, asset allocation, earnest money, terms, and so on. The purchase agreement will also include buyer contingencies, such as financial capabilities, assignment of the lease if necessary, and a non-competition clause. Contingencies are items about the business that you are concerned about and need to be taken care of prior to closing. The broker usually has a list of standard contingencies, but check with your advisor prior to writing the offer. Here are examples of contingencies. This offer is contingent upon the buyer obtaining acceptable financing, inspection of all equipment, an acceptable lease from the landlord, review from the buyer's attorney. The seller will not compete for a period of years in a certain distance from the business. Some variables to the purchase agreement can include the seller carry back a portion of the debt, balloon payments, or a combination of bank and seller financing. You can have a broker write up the purchase agreement, or the attorney can do it. The broker will not charge for writing an agreement, but you'll need to check with your attorney for the cost if they write the agreement. This signed agreement will go to the seller to agree or not agree. If the seller does not agree with the offer, then negotiations will start and continue until you come to an agreement. If the seller agrees with your offer the first go-around, which rarely happens, he or she will sign the agreement. Then you can head to the bank for financing. The process of negotiating can take a couple of weeks, depending on the issues. When writing an offer, you will be asked to put earnest money down with your signed purchase agreement. The amount of earnest money should be 5% of the offering price. You are showing the seller that you are a serious buyer. If you find a clause in the agreement that states the money is non-refundable, beware. When your contingencies are not handled in the proper time period, you will receive your earnest money back, or you can renegotiate the offer. As we mentioned earlier, buying a business can be a long process, one which most buyers should not undertake on their own. The business broker is in the field constantly and knows the economic and business climate. We work with, most say, I would have never picked that off the list, or I would have never found this if it weren't for you, or I didn't even know an opportunity like that existed. This is why it is important for you to take the time to meet with a broker and review the different businesses for sale. There's a place for emails and texting, but when buying a business, it's face-to-face time. How is a business financed? Most sellers would like to be cashed out, all their money at the time of closing. This is not usually the case these days. If there's bank financing involved, the seller may have to carry 10 to 20% of the deal. If the seller carries part of the debt, your bank will want the seller to be subordinate to the bank loan. Usually, you will receive better terms from a bank loan than from a seller. SBA loans will allow you to put in as low as 10%. A seller financing your down payment will be as high as 50%. As you can see, this would be a huge impact in your ability to buy a business. As a broker, I think it is in the best interest of both parties to seek bank financing. The broker or your advisor should have options for different banks that offer business loans. Have a business plan in place prior to meeting with a bank. Show the banker you have put some time and effort into purchasing this business. SCORE can help you with a business plan. You don't need to write a book for your business plan, but have your facts in place and get to the point. The banker wants to know some history on the business and yourself. The banker will want a resume with your business plan and a 2-year projection revenue growth. They will also want to know the changes you will be making to increase business. Put some time into this business plan. You need to believe in it. And if you do, hopefully the banker will feel the same. While you are securing your business loan, your contingencies should be getting settled or nearly settled. Allocation of funds should be completed by the accountants at this time. Hopefully at this time, the closing date has been set and the closing doc prepared through a neutral attorney or your own attorney. A neutral attorney will prepare the documents but will not give legal advice. The neutral attorney represents neither party. If you have questions on any part of the documents, have your attorney review them with you. After documents are completed, both buyer and seller will have a couple of days to review and send back any changes they have. When everyone has agreed upon the closing documents, you are set for closing. Closing usually takes place at the bank of choice for financing or at a title company if there is property involved. Finding the right business is like finding the right job or right house. Sometimes you may own more than one business before you find the right one. If you're looking for the perfect business and you find issues with every business you look at, you are probably not going to purchase an existing business. You may want to consider a franchise. Business owners need to have the adversity to handle imperfections, the knowledge to improve business operations, and the drive to strive for that next opportunity. Most people that can't find a business to pursue don't have a motivation to be a business owner. There are so many opportunities available. If you want to be a business owner, there's a business available for you to purchase. As I stated earlier, you need to have patience when looking for a business. Find a business broker that can offer you existing businesses for sale. And if you are unsure of what you're looking for, consider franchises for sale. If you are interested in a target industry, find a broker that can offer buyer searches. Earlier, when you are looking at a business to purchase, you need important information to help you make an informed decision. If you can't get past the analysis stage, you'll enter paralysis. That may be a sign that a specific business is not right for you. Remember, you are buying a small private-owned business, not GM. Neglecting to investigate a business you may potentially purchase makes no sense. Why would you do that? This is why you need a team to help you through the steps. If you fail to do your due diligence, it's very likely that you will overpay for your business. If you are unable to see the significance of the process and recognize the steps in purchasing a business, then step away. As I said, buying a business is not suitable for everyone. We want to build safety. Let's look at a reasonable approach. Start with the big picture and the end in mind. Look at your goals and the best way to achieve them. Know yourself. Know your strengths, weaknesses, interests, values, finances, financial goals, and create a complete outline of what is important to you. Be honest about what you will or will not do. This is different from what you can or can't do. For example, maybe you would say, sure, I can sell, but your spouse would say, honey, You sit in the corner at parties. You are looking at investing your time and your money. Make sure it is something you will do and will enjoy doing. Do you know what your role would be in any specific business? Dig in and talk to business owners and find out what a typical day in their life is like. Again, be honest with yourself. Likes and dislikes, learn how it matches them with what you will need to do as your role in business you are exploring. Other experts. It can help you simplify the process, and it might open options that you would miss. More importantly, become your own expert. And don't forget to ask yourself, is this or is this what I know? Keep an open mind. What is success? It has to be something you enjoy, something that you are passionate about. Not necessarily about the product or service, but where you fully enjoy what you get to do every day. I have worked with a lot of people from various industries, and I'll ask them, did you enjoy what you did? They'll give me a list of what they liked, such as the team they were in, the focus they had, and the responsibilities they had. So then I ask, were you passionate about the product or service? They will probably say no, because it's not about the product. It's about what you get to do every day. It also has to give you the lifestyle you want, the hours, the role you play in the community, the time you get with your family, etc. And absolutely, one of the measurements of success is being able to make the money you need or the money that you desire. If you walk away with anything from this webinar, remember that the key to finding something that will work for you and your family is to keep an open mind. Don't let yourself be ambushed. Always ask yourself, is this what I think or is this what I know? And the question that I would leave you with today is, if there's a business out there that would get you to your goals, financial, freedom, or control, and balance, something where you could be successful within your skill set, wouldn't you want to know what it is? I would be happy to answer any questions that you have. If you would like any additional information, please feel free to contact us. Virgil, I'll let you wrap this up.
Yes, thank you, Dan, for a very clear explanation of a topic most of us only encounter once in a lifetime. Dan has made himself and his associates available on the prior slide. In addition, we encourage you to seek counseling at your local SCORE Minnesota chapter. They offer many services that you will find on their individual websites. They know the local community and can offer that insight and other experience to you. If you are from outside Minnesota, we urge you to establish a relationship with your local chapter in other parts of the country. Enter your zip code in the score.org website above, and you will see there is a chapter near you. Finally, if you have other questions, we have a dedicated email address to serve you. As a non-profit dedicated to helping you start or grow a business, we must make certain disclosures. We rely on various experts to present a topic, and the content is strictly for your education. SCORE Minnesota, nor any of its chapters, endorses any specific vendor. Finally, Any screenshots of websites and so forth are provided only for illustration and not a statement of fact. In closing, we want to recognize the organizations that make these webinars possible. First, we are very grateful to Dan Bauer and Murphy Business for sharing their experience. Second, Veritas Marketing for guiding us through the technical and policy issues of producing these webinars. And third, Spedco, whose funding and support make this service possible. We hope we have answered some of your concerns about buying a business. Goodbye and good luck.